Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, November the 8th, the year's 2019. Let's talk trading. Weekly wrap up. Okay, end of the first full trading week in November. I hope everyone was profitable. But what I really hope is that each and every trader watching this video, who's been watching these videos for a while, had their risk management in place on each and every trade. Because we don't know what's going to happen next in trading. In fact, that's one of the first principles in which I've been talking about and people have been asking about this week. We don't know what's going to happen when we enter a trade. Well, we know price is going to either go up or down, but we don't know when. We don't know to what extent. We don't know if we're going to hit our profit target, hit our stop loss. We don't know how long it's going to take for price to get there. And that's just another reason why we have to have our stop loss in place with the correct position size. So if and when that stop loss is hit, we only lose what we are willing to lose on any particular trade. So if you think I'm beating a dead horse and you're tired of hearing it, you're not going to get an apology from me because it's that important. It's something that you have to do on each and every trade. You always have to remember it. You can't forget it. Otherwise, doom. So for the week, it looks like we're going to have the one pair that not fill the gap is the pair that I trade, okay, which is dollar yen. I usually trade this pair. Now, if you look at price here, we're at, 0.123, but if you look at the weekly low, 108.177. Okay, now what was the close last week here? 108.163. So we missed it by about a pip. So as I just said, these are pretty good trades. They usually pay off, but every now and then you might miss one, by a pip. And if you look here, the open was 0.197, so it only dropped 2 pips. So, maybe you scratched that trade, or maybe it hit the stop loss. So if you took that trade, you either scratched it at 2 pips, hoping to get that extra pip, or and let it hit the stop loss instead. Because you go, well, you know what, it's usually going to hit it, but nothing is 100%. There's all, it might be in the 90s, but it's never always going to happen here. So, and you see we're 92 pips above that weekly open. One other thing, you see here it broke through the previous week's high, and it hit, let's see, a high of 0.48, so that was 20 pips to the other side. In fact, there was a trader that wanted to know about the wick zones. I believe he was asking about the daily wick zones, so we'll get into that in just a little bit. Only 52 pips off the open. You can see we got really close. Once again, 0.48 to 0.64 at 16 pips. We're close. We just might pull it out and might see the year in positive. Looks like today could be an inside bar. You see yesterday was an outside bar, and we're in that range of the first day of the year. First trading day of the year. Prices within the high and low of the first day of the year. So look for price to break out of here sooner or later. And you can see here on the weekly, back here on Monday, we jumped out of the zone and never came back. And that's the weekly buy zone here. Yesterday, inside bar, outside bar, inside bar was 2 days ago. Oh, and somebody asked a question about what settings do I use on the TRO HL5 indicator. Well, it depends on what I want to show. I mean, on this particular chart here, I have 3 instances of the inside bar plot. So I'm not even using it on this one. But I think if I go back, nope, not on that one, not on that one. Well, we'll have to, let's see. That's not TRO HL5. Here we go. Back on this chart, you see I've got 2 instances. One instance is showing the previous week's high-low, and one instance is showing the current week's open. But if I remember correctly, if I switch the chart, you see it stays. So that's one setting I use, and I'll talk about it some more. Inside bar. So it looks like there was a lot of inside bar action here this week. I hope some of you traders took advantage of it. TRO HL5, once again, in this case, I'm using it to show the current day's open, high, and low, and the previous day's open, high, and low. Range only 4 over 100. The yen coming in at 39. So once again, no rat zone trade. And for those new, yeah, I usually show the same pair for at least a month, sometimes more than a month, to show that you can do trades, you can cut down your variables. You know, you can use one method, you can use one pair, and you can make money. But remember, fellow traders, boys and girls, these videos are for educational purposes only, and your results may differ from mine. And that being said, you have to realize that trading is very, very, very risky, and you can lose all your money. And that's one of the reasons we have stop losses. But if you need financial advice, financial guidance, it's best to seek it from an accredited financial professional. That way, if they lose all your money or you lose all your money, you know you got your advice from someone who was an accredited financial professional, rather than some guy you stumbled across on YouTube or somewhere else on the internet. Okay. Now you see we had the monthly H1 highest open here. It was put in yesterday. Price tried to get above it and then fell below. And you see what happened next. You'd be up about 30 pips or so if you're still in that trade. Then the daily H1 highest open just a few hours ago. See, price went there, gave you another opportunity to get in that trade, and then the rest is history. And these are not, hairy hindsight trades. These trades we do every day, and we use the same setup. There's no squiggly lines harmed, in the taking of pips. So, because we don't need them, we just place these horizontal lines and watch what price does, because price goes up and down, right? See, if anything, price is the one that, let price be the wiggle. So you have your lines horizontal, so price cuts across it. You don't have to try and chase a moving average or a stochastic or a MACD or any of that other squiggly line stuff that they try to pass on as, I don't even know, I guess is the next best thing. In fact, there's this one email I get every day. They've got some other system that they're trying to pass on, and they just do it. But see here, I just stick with the horizontal lines. Now, yes, I do put them in different locations depending on what trade setup I see, but it's still horizontal lines. I mean, you can just use, the grid on whatever chart you're using and trade those horizontal lines, because there are no magic numbers. There's just certain numbers that, a lot of traders look at, such as the pivot point. And that's the only reason why we use them, because other traders are using them, so we might as well take advantage of what they're doing. So in this case, pivot point was outside of the buy zone. So here's the open, here's the short zone. You see the pivots there. So if you took this trade, You either took some small profit or scratched it, or you hit your stop loss. But then again, you got a second and a third, actually a second time right here. This would have been a pro trade coming back down, and it actually hit the pivot. So you could have been rewarded there. And you can see it really wasn't much. We're only talking a handful of pips, but sometimes that's all the bias we need depending on the lot size. And then if you scroll down here, there's the weekly open down there. So, and in case I'm thinking here, somebody, in this case, the TROHL5, I believe is it's doing the pivots and also the VWAP. That's what that's displaying. No rat zone, not enough, no distance, not enough distance between the zones. Once again, showing the pivot. We hit that pivot. We still have 2 missed pivots put in this week. These 2 right here. And you can see how many have missed this year. It's the year of the missed pivots. Might have to take them out next year. We'll wait and see. We're not going anywhere, right? Price action. As I said, you can just space the grid however you want. Price is going to cut across those horizontal lines, sometimes a little and sometimes a lot. Wick zone. Okay, the trader had a question. How many times do you take a wick zone trade? I mean, you do it once a day, once a currency. You have to remember with the wick zone, it says price doesn't like staying in the wick zone. And, I started off the video by saying we don't know what's going to happen next. We don't know. So we take the trade. Now, here, if you took this trade, there was a small profit to be made. If you're placing your stop just on the other side of the buy zone, so your stop wasn't hit here. Now, here's a nice profitable one. Here's one here. Here's one here. And if you got in, your stop still wasn't hit, and then it was paid off. Point is that price doesn't like staying in the buy zone. Doesn't matter how many times it goes in. Chances are, based on statistics, it's coming back out. So I'm not sure if you're worried about it, you taking the trade on this side and then it coming out of here. So even if it goes in here, if it goes across a bunch of other pairs, that's okay. I mean, if it comes into this zone and enters this zone, chances are it's not going to stay in. That being said, sometimes you can see that, well, here's a 30 pip range wick zone. This one here is what? 21. So if you look at the average range, or you do the frequency distribution of the range of the bar, so chances are if it went into this wick zone and goes into this one, it might be, against you, saying because there's not much range that it would come out this way, but it might retrace and go back up. So the thing is, just take the trade. Put your stop on. You don't know what's going to happen next. If you're afraid, that's why you have a stop loss. So you can have confidence about the worst thing that can happen. Here, more horizontal lines cutting across. In this case, 3 instances of TROHL5 showing the daily, previous day's high, open, and low, and ditto for the week, and ditto for the month. And here we have at the tick level, you see price move down about 6 pips or so, and now it's bounced up about 3. On the Einstein line, we did get a trigger since I opened this profile. Not much of one, just taking a pip or 2. Sometimes that's all you get. And for the week here, you can see price hit the upper ATR range for the week, and now has exited that range on a pullback. So, fellow traders, let me just say here for the week, 131 pip range for the day 40. So that's the weekly wrap-up, fellow traders. I hope you've enjoyed the videos this week. Hope you'll come back and watch them next week. Go ahead, ask questions. I try to answer them. So have a nice, safe weekend. And just remember, next week when you come back, it's not what you trade, it's how you trade it. So Let's all drain the banks.